This is episode 25 of the Confessions Podcast. Doors to manual and strap on your seatbelts, people. I am on the flight deck today. My name is Chris Sweeney, and I am joined by my co-pilot, or should I say captain, Mr. Hugh Hendry. How are we, Hugh?
I am the pilot, and I will be taking you through the sky tonight. I have to warn you, we are anticipating some turbulence.
We're on the Hedge Fund long haul here, and we're flying high above everybody else. Thank you last week. We had a great reaction. Lots of positive messages on Twitter, Instagram, YouTube. So thank you very much for all of them. And Hugh was taking no prisoners last week. Hugh was on a mission.
Yes, you remind me, of course, I was laying down some beats. Like I was saying, you can call me a jackass. You can call me anything. Just don't ignore me. But in all seriousness, thank you very much for everyone that responded. Your points were received with good grace. We're almost there. I'm still waiting for the mechanism to hold my microphone, but it's kind of rock and roll.
It left Miami. Is it still in Miami, or do we know where it is, or is it still? Do we know exactly where it is in the world? No.
According to Amazon, it's been delivered to my secret hangout base in Miami, and I'm sure it's coming. But and I've adjusted where I am because there's a lot of bright light coming in, and the light last week I was a bit in life. Maybe I am just washed out. That's why we have to go so back in time, in the annals of time. Because there's not a lot going on right now. But actually this week is all about now. I'm very excited. But before I get to that, again, thank you everyone for your support. Please, if you like it, please hit that subscribe button. Here I am now. I watch everyone else and they all do it, and now I'm selling out. I'm like, please hit the subscribe button. We're great to have you. I'm really pumped up this week because the godfather of macro has spoken.
You talking about yourself?
I'm talking about the boss.
You're talking about yourself, surely? No. You are our godfather of macro, but there is another godfather of macro, and that is Mr. George Soros. Now, Hugh has got a great, amazing. and I'm not just saying this. It is an amazing George Soros story. Sadly, we cannot say it because it makes a I wouldn't say a sizable part of the B book, but it's a critical part of the B project. It comes at an important point in the B project. So if we were to tell you it now, it would take away from your reading enjoyment. So we won't be able to tell you about it now. But George anyway has dropped a sort of a polemic, a speech, a presentation on China. It is called George Soros on China, Xi Jinping and the Threat from Within. And he did that at the Hoover Institution a couple of days ago. So it's all online if you want to check it out. 21 minutes. There's also an edited version down to 9 minutes. But before we get into it, Hugh, can I just ask you about China before we start? Your first trip to China, and when you started as a hedge fund manager in the hedge fund game, was China a big deal like it is now?
Yeah, so my hedge fund, Eclectica, began in October 2002. And the first calendar year, my returns came from gold. But the inspiration, the motive, the thing that drew me to gold, that gave me the curiosity, was everything that was emanating out of the Republic of, is it Republic? It's not Republic, of China.
People's Republic of China.
And you've got to remember, I think it was 2002, Clinton signed off, America benevolently, I know that causes consternation, but a benevolent nation took the high ground and said, you know what, there's going to be costs, but we think the world will be better the more that we have rich and prosperous neighbors. When you've got a rich and prosperous neighbor, it enriches you. Hopefully both commercially and culturally. And so let's do a kind of leveling up, and let's permit the Chinese to trade and enjoy the benefits of our trading system. And so I could see, I just have this intent. From time to time, I get a cacophony of voices that develop and roar inside my head. And I was beginning to look, I could see I could see large swathes of the Western economies, which had been beset by multi-decade bear markets, which is to say share prices were the same or less than they'd been 10, 15 years ago. And there was a strong intellectual prejudice from existing investors that they would never touch these stocks. I mean, and remember, this was when gold had lost more than 2/3 of its absolute price in 2002, 2003 from its high in 1980. And over the same period, the US Standard & Poor's 500 index had gone up 12-fold. It had just been devastated. And so people just, it was the last thing they wanted to do. And, you know, that's where the asset capitalists started to kind of pick up a vibe to kind of push in the other direction. And China would very much be that impulse. China would be the catalyst that would throw a bone to these hungry dogs and transform them. So that was China.
And were you a hungry dog?
I am. What am I? I am the
a rabid dog. No, is that a wee bit insulting? A rabid dog? No.
You know, there's I was on television many times during around about that 2010 period, and I said, think of me and my peer group as being the guard dogs of capitalism. You step out of line, Mr. Big Deal, Mr. Chief Executive, or Mr. Finance Minister. You step out of line and you got to answer to me. I mean, preposterous, but yeah, like there is capital out there and we'll have a go. You know, if you talk nonsense, we'll have a go. I mean, just now, maybe we'll see it as I speak. Maybe I'll superimpose an image of the Chinese renminbi and its value versus the dollar. Macro hedge funds are saying, please, we don't want to fight you. You have, and I include myself, you have kicked our intellectual bottoms for these last 10 years or so. You've just won. We just don't have the stomach. You're like a bully. We get it. But so the chart's saying, please, no. But the asset capitalist is saying, guys, you know, put on your helmet. You know, the dogs of the guard dogs of capitalism. It's time to snarl again. It's time to pick a fight. And why? Because the Godfather has said so.
Exactly. We're going to bring him up, Hugh, but quickly. Your first trip to China. When did you first touch down in the People's Republic of China? Was it on business, holiday, or a bit of both?
It certainly wasn't. It certainly was not holiday. As
Great Wall of China. Great Wall of China, one of the 7 wonders of the world. That's got to be up there. I've been to see that on holiday. It's a pretty big deal. It's the Great Wall of China.
You've been to China, Chris?
I've been to China. Yes. See, you don't think I'm cultured. See, you think I'm not hanging. I've been to China. I've been on the Great Wall. That's correct.
I know you secretly like all those fascist regimes, but you went there for business, or you went on vacation?
Business. No, I went there. I don't go anywhere for business. No, I went on holiday. Yes, I went on holiday to Beijing. Yes, I went to Beijing for 9 days or so. I think it was 9 days. Yeah, and we went out to the Great Wall as well. Yeah.
Who the heck goes to Beijing on vacation? Like when you're in London and it's grey. I mean, you get more sunshine than Scotland, but my God, like you're not gonna.
It was great. I went to Tiananmen Square. I went to the Forbidden City. I went to the Summer Palace. I went to the Hutongs, which is their old kind of like. They've got their old kind of like alleyways. I had this Uyghur. I went to this Uyghur restaurant. The Muslim.
What is Uyghur?
You know the Muslim Chinese people. It was like in my guidebook there was this Uyghur restaurant, so I went there. I just went around different places in Beijing. We went all over the place. Really, it's difficult because the thing is that they don't speak English, and you know why should they? It's their country, fair play. But the problem is in a taxi, it's extremely difficult to get around. So you have to have everything written down. So there was a few times I went places that I didn't want to go because my guide, the guy at my hotel, He had to tell the taxi driver where I was to go in or where we were going, and it was all. Anyway, I had a really good time. I did get involved in a counterfeit money scam, but let's not. We don't need to discuss that. We don't need to discuss that. Anyway.
Well, I got to tell you, I visited all of same said locations.
But I'm not a hedge fund manager. This is, you're like all over the world in your hedge fund. I don't have one of those jobs where I can just like disappear off, not disappear off, but you go everywhere. I don't have one of those lives, so I went on holiday.
One of my trips, I swear, I swear, and probably can be validated, but the chaperones were FBI. FBI's, CIA's domestic, FBI's external. We had FBI ship.
Don't tell us the whole story. Don't tell us the whole story.
No, I won't.
Oh, no, okay.
But they're like, so part of the cover was, hey, let's go to, I have to say, Tiananmen Square. I just like, it was such a big yawn. One of the great minds of the market, most creative, funkiest, significant economist. The only one that makes a difference in my estimation is Professor Michael Pettis, and he teaches finance at Beijing University. And he, when he went to China, he started a punk label and a venue. And I went to the venue, and I was backstage with the guys, and it was impeccable. And then, like you were saying, you've got to be careful with the getting around. And I was on my own, and I was like, I'll get a Chinese Uber, don't worry. And so these guys took me to a party with the Hutons. So I was there with some funky kids, and we were drinking tequila and playing music. And the police come and I'm like, sorry. And then this just happens to me. Like, suddenly everyone's gone, and I'm left on my own, and I've got no phone reception, and it's a maze. The Hutons, I have no idea. Just walking around at 4:00 in the morning. And needless to say, I got home eventually. So everyone that's watching, I'm for those maybe new to the experience, we will talk about macro, and hopefully explore.
That's what we're here for. Yeah,
macro is life. You don't live macro on a screen. So this is what we're trying to capture, real life.
Absolutely. Well, as we said at the start, this is going to be a bit of a special. The King speaks. George Soros. So, what was your initial reaction to it, Hugh, when it came out? But before we go in detail, what was your sort of overall reaction as you were watching it? Were you channeling it? Were you nodding in agreement? What were you thinking?
A, it was impeccable. B, it reveals. I have a long tangential connection. I don't call him Soros. I call him George. I have not met George. I've met the sons, but not George. My seed investors were the seed investors of George. George, now you have to give some distance. He's 92, but he's sitting there and he's reading a prepared script. I've met all the legends, and they cannot speak in public. Believe me, I would swap my superpower, my speaking superpower, for their investing and their billions and billions of dollars.
Oh, when you say speaking well, you mean being creative and being articulate. You don't mean like the way your accent and articulate, because you come from a how should we say, a less than privileged background with most of your hedge fund peers. So you don't exactly come from a place where you're being taught to speak in a certain way than most of the other ones, because most of them come from sort of private or wealthy backgrounds, which you don't.
Yeah. No, indeed. I mean, my first gig, they could understand my accent, it was street language, and I become more pretentious over time, but I speak best spontaneously, unrehearsed. I don't do PowerPoints, and it takes me a while to get going, and you see that with these videos. They're a little bit long and meandering, and I know everyone's time is precious. But if you've got a long walk with the dog, maybe we're for you.
We're all about George this week. So let's sort of dive into it. I mean, essentially, he obviously was saying it. He was talking about China. We've got the Winter Olympics happening this week, starting. So it was perfect to sort of speak. There's a lot of attention on China. It was the ideal moment to come in. And I think if we can sum up what George was saying, I think what he was essentially saying, that 2022 is a key year between, it's going to be a battle between open societies and closed societies. And he also feels that China economically, with this real estate issue, could be in a bit of peril. And, you know, if things are not changed, there could be a bit of a knock-on effect for the rest of the world. Is that kind of is that what you took from it, Hugh? Maybe because obviously you're much more sharp in this area than I am.
I just channeled narcissism, my own narcissism from it. I was like, George, have you become the acid capitalist? Have you been listening to the macro confessions that I did with at Tostero with Tom Roderick, my former investment partner? Because
which is still on YouTube. People on this channel, you can check it out.
Early December, where Tom had come up with this revelatory observation pertaining to the zodiac.
Yeah.
The zodiac. And it's you think, really, the zodiac? But in my defense, and remember, I was not trying to outsmart the world's smartest investors. I was trying to come at it a little bit left field. So when those moments arrived, when even those anointed with super smart intellect and the greatest resources on the planet, I mean, there have been years when I've beaten the biggest hedge funds and I've beaten governments and their treasury departments staffed full of thousands of PhDs, because they're not set up for those moments. They throw their hands in the air and they say, but that's preposterous. Who could have thought that would happen, that would come to pass? That was my role in all of this. So the zodiac actually has a big bearing, because, yeah, this is all absurd. I'm looking at the future. I'm trying to find the gap in the curtain, just those moments where I get some clarity on what may be about to unfold. That makes me not a value investor, not a growth investor, not a momentum investor, not a credit investor, not an equity investor. That makes me a time investor. I believe that those little cracks and gaps that open up, that they permit me to see something, and if it's relevant, it's going to be something which is going to be drawn down from the ether, from the skies. I'm looking at heavenly bodies. I'm charting the movement of these heavenly bodies, and I've got to be able to draw it down typically within 2 years. And we're going to review the paper that I wrote, which was April 2012. I've already put some of it up on Instagram the days prior to the release of this. And last week, of course, we left January 2006. So we're kind of skipping ahead, and we're doing so owing to the Godfather's intervention. Because back to the time, so again, remember, if we think of last week's copy, I was remonstrating. It was Hugh on Hugh. I was remonstrating with myself, with my younger self, because in January of 2006, I had prophesized that Weimar Ben would be chairman of the Federal Reserve, and he would be responsible for a deflationary shock which would shake the foundations of the American economy, that would send government bond prices to the sky and would lead to a huge reversal in the gold price. And within 2 years, all of that had come to pass. So there's your 2 years. And believe me, in January of 2006, that was as far removed from consensus as you could possibly be. So now if you imagine we are April 2012, and my beef is China. And my beef is that this great financial crisis that began with Lehman Brothers and the summer and the autumn of 2008, by 2012, it had run like a horrid or a torrid course. It was like a forest fire that had devastated the American banking community. It then moved on and sought to devastate the European project of fixed exchange rates. It revealed that Greece had been cheating with its fiscal numbers, and it put profound pressure on whether communities like Greece and other of the peripherals, the pigs became this reference point, Portugal, Italy, Greece, Spain, all of these government bonds, they blew out in terms of their share prices were recognizing a legitimate concern that perhaps they couldn't stay within the system. But by April 2012, I was saying, pretty much that's run its course. The thing that's got this cycle, this kind of depressionary cycle, will conclude with a challenge to the dirty peg, which is the renminbi. So, or the yuan. In China, the currency takes several names. The yuan, the renminbi, we call it the CNH, we call it the CNY. But the cut and thrust of the matter is that if you're Chinese, it's a bit like being a Brit in the 1970s. There's a limited amount of money that you're allowed to take out of the country. Very limited. It's prescribed. It's a closed system. And the Chinese authorities, they paint, I call it painting the tape. They use central bank intervention to create a path, which is they try and prevent the renminbi or the yuan from appreciating too quickly, too greatly versus the United States dollar. And I was likening that. So these interventions, they're not, it's a perversion of the market spirit. It's a perversion of where economic logic wishes and dictates that we should go. And so you're kind of damning a lot of economic pressure, and it doesn't leave, it just floats around seeking for an opportunity to reassert itself. This happened in the 1920s with the gold standard. America played the role of China. America was super competitive versus, the old continent, the European continent. Of course, the old continent had just gone and busted itself with the devastation of the First World War. And where you normally got a robust and dramatic recovery out of the devastation of war, that was stymied by the fact that America was just eating Europe's cake, that all of the capital wanted to go to America. And it was American jobs, it was American factories, it was American productivity. And so in Europe, in the UK, it's a great example. Unemployment, So this is what imbalances, economic imbalances between two large trading partners, they create social tension. And that led to the disfigurement of the American stock market was way too high relative to everything else. Fast forward almost 100 years, 90 years, and China and America are playing this. And China is the one that's capturing all of the jobs, all of the factory openings, all of the onshore investments. And it's the US and the West where we're getting deflation in wages and de-skilling. This has happened before. And eventually it will call for a reset on the hegemon of the US dollar. People think the dollar has it's bestowing privilege on the US. It is not. It is bestowing privilege on the Chinese. And so in 2012, I was prophesizing that this was going to go into the mix. There was going to be a revolt of the economic census. But what I didn't realize, because this again is all looking at the stars, looking ahead, and what I didn't realize is Chinese culture measures the progress of heavenly bodies around the sky over the course of 12 years, where in the West, we look at the rotation of the Earth around the axis of the sun in a year. So that my 2 years, that equation was absolutely busted. And what we have to do is we have to add 12 years on to 2012, which is to say the epicenter of whatever may befall China is 2024. And think of that paper now. Here we are in 2022. So this is, if you will, 2006 and me prophesizing the Lehman's event, which pushed government bond prices to the moon and it led to halving in gold. The logic was perfect back then. The timing was out by more than a decade. But hey, what's a decade between friends, Chris?
Oh, absolutely. I mean, it's when you put it like that, but it is quite spooky when we add on the 12 years from 2012 to 2024, and then we take away the 2 years for your window. It's like Soros is saying it pretty much at the same time. You know, it's kind of there's a bit of a spooky lineup there. A couple of questions I want to ask you about China. Obviously, you were predicting there was going to be big issues on the horizon. Then Soros is saying it now. It's being reconfirmed. Are we too far down the line? Can these issues be averted, or is it too late and we just have to brace for impact?
Brace, baby. Your captain. We're going to try and land
Assume
this.
the brake position, yeah. We're going to try and land on the water.
Brace.
These issues pertained to China back in 2012. And the Chinese chose not. It would have been better if the Chinese had responded to these issues in 2012. Instead, they found that politically, it's a one-state party, and it's 1.4 billion people. And the kind of quid pro quo is, leave us in power, or we'll leave you in power as long as you kind of, we're frogs in a jacuzzi. Just don't let the water get too tepidly cold, and don't like boil us alive, okay? Which is to say, if you make us prosperous, we'll be benign and we'll put up with your jackboots and all your nonsense. The Chinese bureaucrats, these legendary, wise bureaucrats, were actually terrified of the consequences of allowing GDP to decelerate. It's preposterously high and was clearly unsustainable. And just like the currency, over the course of the next 10 years, they brought that growth rate down. They engineered a deceleration in the economy from, let's say, 12 to kind of 6, 7 going into COVID. And now estimates are probably 5, 6. China today, with its the leveling up of the last almost 3 decades, China is a 3% GDP economy. Some years maybe 4, real. And so the figures were somewhat engineered. They're engineered in the sense that how the Chinese economic system differs from our own is you've got 2 economies, and one of the economies, China, commits to building a massive bridge with, infrastructure is all about moving people from point A to point B, bridges, trains, airports. And what you're doing is you're giving the ability of your citizens to move quicker. Now, that has a huge economic benefit when you've got lots of really rich people. The fact that you can move them more quickly means that they can put their talents to more productive use. So, there's a great travesty going on in the UK where they have, they began with an infrastructure project, a train project, a high-speed rail project, which would link the northern city of Manchester and surrounding areas with London, really bring it very accessible. Cut the journey from, this, Chris, from 3 hours to 1 hour, let's say.
Yeah, something like that, yeah. HS2 it's called, if anyone wants to look it up, HS2.
That's 2 hours that those people could be spending better deployed in economic endeavours. Now that 2 hours ends up being a big deal when you work out that the average per capita income of the populations of London and Manchester are probably like $50,000, $60,000. So people earning $50,000, $60,000, and you save them 2 hours from a day, That's huge. So you're going to get a net present value. You're going to create economic value from such an investment. Anyway, consider the same rail project in China with the same costs. Okay, and let's say it's 100 billion. The economic value of connecting two communities. So yes, typically everything's connecting to the center, Beijing or Peking, but not all the time. But on one of the nodes, you'll be far into the interior, and the community, the average per capita income in China is roughly $10,000. And we were talking about being 50, 60,000 in those communities between London and Manchester. So 6 times greater. Same cost for the rail project. And yet, in one of the nodes linking the track, you're probably looking at citizens with the average GDP per capita, the average pay packet is maybe $5,000 or $6,000. Now, at that level of income, the amount of economic value that you can create by saving 2 hours from their daily commute is not great. It's not. The cost is the same, but the value is not as great. So what happened is China was like, we don't care. We're in it for the long run, and part of that is the sagacity. But if you spend $100 billion under that pretext, in economic terms, you have to mark the $100 billion. You record it at its net present value, the discounted value of all the future benefits that are going to accrue. And you will find that all of the accrued benefits are in China, they're going to be probably $30 billion. And so you've lost $70 billion. In the UK, you probably, at minimum, the value from it is going to match the cost. And I would argue over the long term it's going to exceed. So you've got 2 different systems of GDP. The Chinese thing just adds the rail link that says, well, we spent $100 billion this year, so our GDP expanded by $100 billion. In the UK, if they make a disastrous investment like Concorde, in today's money, the British and the French governments probably committed $100 billion to the development of supersonic airline. The net present value, the wealth of that project was more like 10 billion. Okay. So what happens in the UK, the French, the Western system? GDP hasn't expanded by the $100 billion of money that you have spent. Instead, it has expanded by the net present value by the wealth that you have created. So imagine the Chinese economy seems to be growing rapidly, and the American or the Western is growing. It's like the hare versus the tortoise. But who is actually got it right? Now, the stock market's kind of wise. One of the conundrums is there's the Chinese economy and it's grown GDP on average in the last 20 years. I'm going to make this figure up, but it won't be far off 12% per annum. That's like 4x. That's maybe 5x what the US has achieved. And yet, the Chinese stock market, it's not flat as a pancake, but it's almost done nothing. Why has the Chinese stock market done nothing? Because they've created GDP growth at the expense of wealth. The stock market is a scale, it's a weighing machine, and it measures wealth, not GDP.
And this all, I mean, the way I understand it all, and as Soros said, and you said, and other people have talked about, obviously we all know Evergrande or Evergrande. I'm not sure if you pronounce the E or not, but they're the big real estate company out there, and they were one of the ones that are sort of struggling. They can't pay their liabilities back, their loans. It's all these issues, and essentially the real estate out there is they built all these houses, they built all these flats, and shout out to Tom Roderick. I saw on his Twitter that he was saying that they actually overestimate their population on purpose, because it looks like there's enough people to buy these properties. So there's even less people to buy these properties. then the subcontractors, they don't get paid. And then the price of the land falls, and the real estate was a big thing pushing their GDP growth. So it's a bit like, what is it we say when the tide goes out, who's swimming naked? I mean, is this real estate thing, is that almost pulling back the curtain for a lot of people? Am I fair to say that that's kind of cleaning up the mist?
Yeah. So what's happening? What's happening? If you work in China, and this is a generalization, but it's a fair generalization, you are not paid the sum of all the economic benefits that you bring to the table. What are the economic benefits? The economic benefits are the productivity. When we move you from a paddy field, and of course this is an old analogy, this pertains to, but I think there are 400 million casual workers. These are, almost no education. These are shovel handler kind of guys. But if you move them from the countryside and you bring them to the proximity of Beijing, Peking, and the coastal cities, and you put them in a factory, the value added to the economy, like they're spending the same hours, but actually they're achieving so much more. Now, you pay them, 5x more than what they got paid, shoveling soil in the countryside. And they're delighted. That 5x, they never dreamt that they could earn 5x. They're earning 5x what their parents earned. But the economic reality is it should be 10x. Okay? So then the economy begins to slow down, and that becomes more and more apparent. And remember, the money and the savings are trapped domestically within China, because I told you the foreign you just can't just phone up and say, hey, I want to buy I've got a million renminbi in my Beijing account. Can you change that into today's exchange rate? That would be $150,000. You can't do that. You don't have the freedom, the liberty to do that. So the Chinese said, hey, look, we could have a revolt. You keep people happy by keeping them prosperous, or happy. Maybe happy is not the right term. I don't like happy. I don't like that term. You keep them not questioning your legitimacy by keeping them prosperous. So the gig was, so we don't want to pay them more, because one of the major thrusts in our model is GDP growth, which requires that we capture more and more of export markets. So we need to create more and more jobs, and we've got to pull that from the rest of the world. So we've got to keep our currency undervalued. And the undervaluation of the currency is paid for by Chinese households. So there was a need to kind of throw the dog a bone, and that became housing. Let's get all of this domestic credit, and let's encourage them to buy houses. Houses are apartments. Yeah? And the price of those apartments went up higher and higher and higher. And as it goes up, if you want to create a mania, we spoke about Cathy Woods last week, Chris, yeah? Cathy Woods with the ARC Fund. Cathy is I've got nothing against her. Put me in her position, I would do exactly the same. She got great timing, and the underlying instruments assets went up fourfold from her launch in 2017. When something goes up 1 times, 2 times, 3 times over a short period of time, people can't get enough. Everyone wants a piece of the action. Everyone wants to get rich. That's what's happened in China the last 12 years, and it's reached levels of absurdity. What is the absurdity? The absurdities, again, it's a on average, and I know there's a lot of them, so averages get distorted. Stick to the average. It's a poor country, and yet it has the highest, the most overvalued real estate in the world. And that's like, really? What else can we say? Building these apartments was contributing 30% to GDP growth. So what's the number one thing the CCP, the Communist Chinese Party, wants? It seeks legitimacy for its fascism from having high rates of GDP growth. So tick, they're happy. So what's happened is that the valuation of Chinese property has reached an extreme level. It's reached 4 times GDP. It has reached the same levels which we saw in 1989 in Japan. And bad things happen to you when they become vulnerable. And Xi, the great leader who's looking to become like Putin and be the leader in perpetuity, he made the biggest tactical mistake he made was not to prick the bubble, so to speak, 8 years ago. He should have. You take on the bad when you take over, so that at the end of your tenure you're looking pretty. And he's made that mistake, and he tried to tackle it. So we mentioned Soros, the godfather, George, said Evergrande. I don't see any accent on the E. I thought it was Evergrande. But if the godfather calls it Evergrande, it's Evergrande.
That's what I'm calling it. I don't know. I can't remember what he calls it. I've heard different people say different things. But anyway, that's a side point.
George calls it Evergrande. And so we're in the throes of the world's biggest property bankruptcy. And the biggest bankruptcy, I believe, in China and the rest of Asia.
Well, let me ask you a question. Let me ask you a quick couple of questions. Number one is that after 2008, we saw the housing crisis around the world, and we saw what happened, and there was complete meltdown. Now, wouldn't have China noticed that and then thought, right, we better not let that happen to us, and we better make sure that, I know it's no different circumstances, but the knock-on effects of that. And secondly, is it possible they've got a rabbit in the hat? Have they got something else that they can use to keep this prosperity going? Something else that they can replace the housing with and bring something else in to keep the country ticking along and keep people prosperous and content?
Back in 2009, Gordon Brown, who was wasn't Prime Minister for long, thankfully, but he was the Prime Minister of the United Kingdom. And to give him credit, he was an intellectual and a deep knowledge of economics. Wouldn't have him running a hedge fund, but deep knowledge of economics. And he grasped the severity of what was going down. And he correctly saw that if left unchecked, this could be a rerun of the 1930s. And no one wants that. 1930s, ordinary folks, families really suffered. Forget the Dust Bowl, because that was just bad luck. That was an agricultural devastation on top of an economic devastation. But really, really suffered. 20% male adult unemployment is, you would wish that on your worst enemies. And so he gathered the leaders of the 20 largest economies and thrashed out a deal. And the deal was that China would bring forward its future consumption. It would spend now. It would do more high-speed rail. It would do more bridges. It would build more airports, and they would build more skyscrapers. They did all of that. And if you will, China, it was very... we have a debt of gratitude for them doing so. It was actually, if you remember, I was berating my young self last week, because whilst my prophecy had come true, I failed to buy gold at the low point. Which is to say, just after that G20 meeting, which was March 2009, industrial commodity, copper and iron ore, they went zooming up, probably went up fourfold, because China was the CCP just put an order into Australia, to BHP Billiton, to all the miners, like, fill me, I want everything you've got, I'm spending big. And so, if you will, China provided they lowered the economic risk landscape, and they kind of made the difference They were somewhat the difference between the decade of the noughties being a rerun of the 1930s. They made a difference kind of owing to China, owing to how the Federal Reserve pivoted. That didn't happen. But what the Chinese were doing, they were borrowing from the future to inflate today. So after 3 or 4 years, the spending was nominally or notionally unsustainable. But they became like crack addicts. They were crack addicted to the GDP, to the glow. People love you. GDP's growing at 12. These guys are geniuses. Who would... I mean, yeah, they're jackboot fascists. You rip off their skin and they're lizards. But I'll put up with that if they're going to produce 12% GDP. So the lizard guys are like, we got to keep it going. And that's just like... And so it's like, well, what else have you got? And someone's like, houses, apartments, building blocks, right? And they just went bonkers. And we can say bonkers. It's a statistical term in economics. When property is 4 times GDP, bad things are going to happen. That's what the Godfather just told you. He said, see, bad things, they are going to happen. Okay? And there's nothing. It's worse. It's worse. It's worse. It's not that there's no, and believe me, there are no lapins. Lapin is French term for a rabbit. There are no rabbits coming out of chapeaux. Chapeau is a hat. There are no...
Très bien.
Merci beaucoup, mes amis, le français. It's worse than that. And I've got to be very careful with language because people are listening in, the algo on YouTube. But, and this is theatrics, but I mean, George really went at it. And the thing, whilst George was, a little bit dull, a little bit hesitant, a little bit old, he has presence. This guy is rarely wrong. He's almost never wrong. And the great thing about that is the intimacy. It's you and George. And I know for a fact that he would have sat down at some point. And he's certainly not done 23 minutes. I doubt he's done 9, but I bet he's done a minute. And George is like, I got you. I got you. I'm coming after you. I love you, George. Now, what George says, and this is where we're going to be careful with language, is the invasion of the body snatchers. I think you know what I'm talking about. The thing, yeah, which began in a city that I visited in 2009.
Wuhan.
Wuhan. And we know what came out of Wuhan. And initially it was like, God, was this, because what happened was we became a rule-bound society. We all had to wear masks. We all had to obey the centrists. Globally, it kind of life felt a little bit like being governed by the CCP. But actually, it was occurring in free democracies. And free democracies, they get many things wrong, but they are fountains of ingenuity, genius, creativity. And through all the chaos, we found a response to the body invasion. We pushed the aliens back via the medicine. Let's call it the medicine. The West developed best-in-class medication. And we've only just grasped the significance of that because its profound power has revealed itself when another horde of aliens came from the planet Omni. And these guys were more, it spread quicker. It was actually perfect. Probably, this is my estimation, it was absolutely the perfect thing to happen to the West because it gave us, at a point when we were ready, owing to the genius of our creativity, we were ready for herd immunity because we had the medicine and we all became infected. And now we're at the point where we're beginning to look to put it behind us. It's no longer in front of us, it's behind us. We hope and we pray. But our friends in Beijing, what do they put? They put prejudice before everything. They put that they've got to put their signature on everything. And they don't have the creativity that we have. But for a medicine, it has to be Chinese. And so they did not endorse the technology that the West had. Now, they had another technology, but what it's revealing is it's not as good as the medicine that we have. And so now that you have the remnants, which is kind of going around the world, you have the remnants of this other alien invasion from Omni, the planet Omni, you're finding that our Chinese friends are unguarded. They have no defense because their technology, their medicine is not up to it. So they're not ready for herd immunization. And so they're pursuing what's called let's call it a zero policy. And so what does that do? That's pouring sand into the gears of commerce at a point when the whole commercial system is ossifying, it's freezing itself. They've lost all exit routes. It could be that the greatest victim of the alien invasion of the body snatchers actually was the fascist regime in Beijing. I hope you're watching, Z.
Well, I'm hoping to go back to China one day. So as long as I get in, as long as I get in, because I want to go to Shanghai. I've never been to Shanghai, but that is a side issue. Now, the thing I want to ask you, Hugh, is here. So we've got a situation where we're in a world where everything's connected. Obviously, China is a major, major economic power, but things are looking badly, as you say, as the King Soros himself says. Now, do we need to step in and help them? Because we're all connected. So, I mean, if they go down, don't we go down with them? So are we going to have to sort of, send the lifeboats over and rescue them in the water?
No. And again, when I say they, I mean the CCP. I do not mean the Chinese. I like you, I have been to China and I found them gracious, welcoming, humble, immensely hardworking. I take some issues with some of their dietary things, but actually, do you know what? The traditional, I would have traditional Chinese food over the garbage, the garbage that people eat
in Scotland,
in America. Well, like the norm, the obesity is for a reason. So all of that, this is intergovernment. Yeah, I'm a guard dog of capitalism. I'm not coming after ordinary Joe. I'm coming after the bully boys at the top. The economic system in China is a great swamp, which is turning the rest of the world into serfs. We all think we're serfs of America. America is becoming a serf state to the Chinese because it allows the Chinese to compete with an unfair economic advantage, which is that the Chinese do not allow the market to set the level of the renminbi. The renminbi, the Chinese currency, owing to the economic advantages, the labor, the productivity, what you pay, the logistics, the infrastructure, etc. The renminbi, which today is about 6.35 versus the dollar, if market forces were brought to bear, it would be trading at somewhere between 3 and 4.5. That's a wide range, but significantly, it would be it would be higher valued than it is today. And the fact that it's not means that China wins out and we lose jobs, we lose incomes, that people have to save more. When you save more, you consume less, and it becomes a vicious circle. That system will have to change. So there've only been about 3 systems, and you won't be familiar with this, Chris. We had the gold standard system, and it was brought down in the early 1930s. We then, after the Second World War, moved on to the Bretton Woods system, which would be it would all be administered by the dollar at the center. But if you held dollars in your sovereign accounts overseas, you could come to a window and demand that those dollars be exchanged for dollars. And that was closed in 1971. It was actually closed about 15 years after it became relevant, because it'd been replaced by what we call the Eurodollar system. What is the Eurodollar system? It's called that because you started to see the emergence, of course, initially out of London, I think it was NatWest Bank, of overseas banks creating American dollars. How do you create a dollar? You make loans in dollars. You create dollar money. And so you started to see the emergence of a gigantic creation of dollars offshore and outside the ability of the US Federal Reserve government to actually administer, regulate. That system is dying. That system effectively died in 2008 with the demise of the US banking system. That system needs replaced, and it's coming. It's probably going to come at us within the next 5 years. And to your point, because there's no rescue boat from us, I tell you what's likely to happen. The Chinese are likely to devalue their currency. So a currency which is already undervalued, they're going to, I suspect they'll go for a 20% devaluation. They will. It's a textbook move. It's been done before. The last time it was done was Taiwan, and Taiwan has the same kind of economy and economic benefits. Smaller, of course, much smaller. But they did it in the midst of the Asian tiger crisis in 97, and it made no sense. But they did it anyway. And it's a bit like you and me fighting. And I'm like, and it looks like you're going to win, Chris, and you're going to kill me. It's the Squid Game. It's the conclusion of the Squid Game. And you're like punching me, taking me down, and you've got this knife. And all the time you've been winning because I've been holding one hand. I've been unable to use one hand because I've been holding a live grenade. And if I take my thumb off it, it's going to blow. But I can't do that because I'll go with it. And right just as you're about to plunge that dagger through my heart, I'm like, boom! And I take us both out of the system. I am fearing that Mad Max world is coming to an economic cinema near you.
It is scary times. It is scary times. And I wanted to just actually remember, because when I was in Beijing, this is taking me back down memory road here. I was walking and I stopped outside what appeared to be an estate agent. And I looked through the window, or a real estate agent for our American viewers. I looked through the window and I was just looking at the apartments and, just as you do, just passing the time of day. And there was quite a few young chaps in suits at their desks. And they looked around and saw me looking. And as I walked away, a few of them scrambled to the door, and the first guy out managed to get up to me and was running up to me saying, do you want to buy an apartment? Do you want to buy an apartment? Like, he was desperate to sell it. And just as you were saying that sort of foreshadowed, this kind of like just hit me back to what you were saying. They were desperate to sell these things because, I've never seen that anywhere in the world. Like, they literally ran down the street behind me. And I was just a guy in shorts. I had no means of, I certainly didn't have any wealth, and there was no outward signs of any wealth to buy an apartment. You know what I mean?
Chris, you were an eccentric billionaire for all they knew.
Well, yeah, if only.
But so it was the best of times, and it's going to be the worst of times. So the best businesses, and I didn't observe this. This is really Tom Roderick really hit me with this point. The best business in the planet for the last 10 years since I wrote that paper were the Evergrandes, were the real estate property companies in China, because you were given access to credit before the condominium complex, before the apartment block was built. The Chinese developer got all of the cash, all of the capital necessary to build that apartment block. They got it before, well before construction was complete, which meant you were able, like Project A was financing Project B, and Project B was financing Project C, which meant you could run the business with no capital. Amazing business, but it was financed by credit. And that means it is so close to what we saw in America, where you had mortgage originators between 2004, 2006, 7, where you gave loans, but immediately you sold them to Wall Street. And so you got all the money immediately. It was very, the economics, money came to you. Typically, you're chasing money. Money came to you, and that made them great businesses. But when that unwinds, you go from being the greatest businesses on the planet to having no business. You go bust like so quickly. So it's.
What do you do right now if you're sitting listening to this? I know you can't tell them what to do, but if it was you sitting with money in China or interest in China, is it just get out of Dodge, just get everything out and run for the hills, basically?
Yeah, I mean, and so the major institutions, pension funds, and all the big smart people, they just put more money than they've ever put ever in China last year. The system is so stupid. This is why crazy people like me, every now and again, is the loonies, it's the shaman, it's the asset capitalists that get it. So you think, oh, this has got nothing to do with me, but it's going to be in your pension fund, I'm afraid. In terms of the legions of investors that try and have a go, you can buy. There are some, I think, are they ETFs? There are some publicly traded funds in Europe and the US where you can buy the sovereign bonds of China. And interest rates in China are higher than they are in the rest of the world. But as all of this unfolds and it gets tougher and tougher for them, those interest rates are going to go to zero. And so as interest rates go to zero, the price of bonds goes higher. And you can access that. And we will post some names. And they're working. So again, I have ideas, but it requires the legitimacy of a trend. Well, we have that legitimacy. And actually, there's a great mystery going on in America where the Federal Reserve is, well, first step, we have inflation running at 35-year highs in the Western world, if not longer, 40 years, 7, 9, big rates of price increases. Price of bread or whatever people quote. These things have gone up enormously, squeezing people. And so the Federal Reserve, the central bank, has kind of intimated that it's more than likely to raise interest rates. It's saying, hey, look, we're at a party, everyone's getting too drunk, stop serving alcohol. That's what they said. We're going to, progressively, we're going to take, the punch bowl, we're going to stop, rather than giving you a full glass of tequila, we're going to give you a third, then a quarter, then nothing. Just go. And that's what they've announced. And yet, government bond prices for 10-year government bonds, it can't break 2%, which is really low. Inflation running at 9.75 and the government bond market. So, what is that? That is big institutions. These guys, their career, their reputation is on, they own trillions of this stuff. And inflation is meant to be bad for the bonds, bad in the sense that the price will go down, and so they'll lose their jobs, and yet none of that's happening. They're not selling. The price is not going down. What's happening? What's their beef? Maybe because what happens with those prices, it's not just people like me, it's commercial entities looking forward, and they just start to kind of have a gut feeling that something's not right, and they hedge, and all of that hedging manifests itself in the price of these securities. And it would just seem to me that there's an invisible REM, cultural REM, which is picking up that something ain't right in the wider universe, and probably emanating out of China. And maybe that's why those government prices have not been falling, and it's maybe why those government prices are going to go higher. And then finally, you can, for some people, you can trade the currency. The currency is unlikely to do much in the here and now. Remember, in January 2006, despite my thesis being bang on the money, it was bang on the money 2 years later. It wasn't bang on the money in January, February, March, April 2006. Okay, so this is a fuse. I think the fuse is lit, but it's slow burning fuse. So the currency's not kind of going to do much. The only good thing is, owing to that, volatility, which is essentially the greatest determination of whether options are cheap or expensive. It's a function of the level of volatility or implied volatility. The implied volatility is very low, which is to say that options are very low. And so those who can trade options, I would be buying. So I said to you 635. If the currency weakens, paradoxically, the number goes up. I would be buying like 7 strikes. And I'd be buying expiries starting 1 year forward and each year forward again. And I'd be taking my time. So there are things you can do. We spent the last few editions looking at IPOs, these new stocks, which came to the market with lots of excitement and then have lost 50-60% of their value. We were looking at NASDAQ last week, and we were saying that it had fallen peak to trough by about 18%, which is knocking on the door of a bear market, to use the silly language of financial media. Bitcoin has halved in price. And government bonds, despite still being kind of stuck below 2%, they have been a little bit weak. If anything that I'm saying is correct, I suspect that in the course of the next 2-3 years, US 10-year government bond yields will trade as low as 40 basis points, if not lower. The CNH will trade through 7, and there may be a tail risk where it goes 8. And that the riskless securities of Apple, Microsoft, Facebook, et al., I think there's 2 others that I'm missing, Amazon is one of them.
Google.
I think Google, thank you. They will all make new price highs before this whole process is over. So it's going to be fun, people.
It's going to be a rip-roaring ride. Obviously, Soros has really put some gasoline on the fire, shall we say, and that's going to spark things up. We had to say. I want to ask you about your monthly, because we're talking about April 2012 when you wrote that piece, and you took down Ike Batista, who, for anyone who doesn't know, is a very colourful, controversial Brazilian investor. I think currently, from what I can see, he's under a bit of pressure at the moment. I think he got involved in a bit of issues with money being given to politicians, etc., etc. So I think he's actually under house arrest in Brazil at the moment. And he lost a lot of money. But some people say make a comeback, he may be coming back. But he's a bit of a colourful character. But you certainly had no time from Hugh. You got stuck right into him.
Okay, so that's I'm strumming through my monthly, because I've got a picture of Ike. But I am mean. But there is Ike.
I don't know if that's his, because I know his wife was a samba dancer. I don't know if that's her, but they have since parted ways since he got involved in this controversy. So I don't know if that's his wife, the samba dancer, but they're no longer together, if that is her.
When the money stops.
The samba dancing stops.
The samba goes elsewhere, perhaps. Who knows? What do I say anything here? I must probably talk about it previously. So poor Ike. I found this quote. I think it was in a Sunday newspaper, not a financial newspaper. But there was this interview with this guy, because he was a playboy Brazilian living at large, and he was one of the richest guys on the planet. And he was saying, hey, just look at the assets. Jesus. By 2015, we will be making 10 billion, 10 yards. Between 2015 and 2020, that will double or triple, presumably to 30 billion yards. And they're discounted. He's saying, like, we're actually doing present value. The nominal numbers are going to be 50 billion. And literally that's how I was like, ooh, you silly bugger. I'm very tuned into hubris when people are overconfident. And in that paper, right at the beginning of that paper, I was saying I am bearish on the profile of industrial commodity prices. Because again, from 2019, from Gordon Brown's G20 meeting in London to save the planet, to bring on the Chinese, to overspend, to bring consumption forward to the present time, to build a bridge from 2009 to the future, that all happened. It all happened. Copper had gone up 4 times. It'd been done. Infuriatingly, I missed it, and that's why I was so angry with myself last week. And so I know, I don't know, but my shaman instinct, the voices in my head are saying, next stop is down. We're going down. And then Ike's like, no, like, we're going to the moon, baby. We're going to the moon. Samba tonight with Ike. And so what was he doing? He was invested in iron, like greenfield iron ore projects. He was shipping iron ore from Brazil to China, which in Brazil, of course, is geographically further removed from China than Australia. So it's, there's a higher shipping cost, but it didn't matter. In the bull market, didn't matter. In the bear market, kind of mattered. And Ike, he was overconfident. He had overextended himself. He wasn't thinking worst case scenario. And when the industrial commodity prices fell, like I said they were, he got margin call. And he ain't no longer one of the richest guys on the planet, and he don't have the samba.
Absolutely not. Margin Call, good movie, by the way. Wanted to say, good movie, starring Kevin Spacey, Jeremy Irons. Good movie. I know you like it as well, don't you? Yeah, you've always said it was one of the best like financial movies in terms of realism and stuff. You've always said it's quite a good one to watch. Yeah.
The Jeremy Irons, that's how I ran my hedge fund. He's got the risk guy in the boardroom, and it's the emergency board meeting to reveal that the bank is busted. But it's complex. It's credit default swaps and blah, blah, blah. And he's saying to this young kid, he's like, just think of me as the family Labrador. Right? Talk to me as if I was the family Labrador. Imagine I'm saying to the kids that work with me, I'm wearing these sunglasses and I've got a huge metal bar and I'm kind of banging off my hand like, just relax. Tell me, come here, come closer. Tell me that again.
And before we go, I mean, one thing I want to ask you about was that in terms of George Soros, a lot of people know him for his political commentary. Obviously, this speech, there is economics, but there's an overhanging political commentary. But for you, being a hedge fund person, looking up to him, he was a legend to people like yourself. I mean, can you maybe put his position in the hedge fund world and how the people look up to him? Because I think a lot of the public will just know him for being involved in liberal causes and being demonised by certain governments and regimes, but he's had a whole other career before that, or a whole other life.
I mean, untouchable in terms of his investment returns. Was he a nice guy? Was he fun to work for? I doubt it. Like, does that matter? It matters at a personal level, but in terms of defining legend and investment returns, he walks almost alone in terms of he did it for such a long period of time and with different groups of people. Now, his open society is that's him giving his wealth away, but in pursuit of his ideology. His ideology favors open society. What is open society? Open discourse. You got a problem? You don't like me? I'm your representative, your elected leader. You don't like me? Gather enough of your fellow citizens and get rid of me. In the United Kingdom, there's the statute says, it did say, David Cameron introduced it was a good idea, and then they've unwound it. But there used to be, this government can sit for 5 years, and it has to sit for 5 years. After 5 years, we got to change it. Let's have a go. Let's get to 5 years. If you don't like what we've done, bring in a new law. That's an open society. Who doesn't like? Who are the biggest critics of the open society? Russia, China, Hungary.
I was going to say Hungary. That guy definitely does not like Soros. Orban, he's not a fan of Soros. Yeah.
Okay. So, and then there's this weird thing on the political right in America. They really, as we saw with the preposterous Donald Trump, this. They're drawn to these hard men. They're drawn to Putin. Putin is a joke. Like this whole thing he's doing. So his first foray into Ukraine, it's been a disaster. He's stuck with it. Before he stumbled and he made those strategic errors, he had huge. His puppets ran the country, and then he blundered and he overstepped and he took Crimea. Who cares about Crimea? It's kind of okay. It's Russia. Boom, done. But now we're watching you, all eyes, and we've just worked out all your puppets. And we've kicked them all out. You have got no political clout. The West loved the status quo. And then Vlad the blunderer is like, not content getting it wrong one time. He's like, oh, I'm going to go all in. Really? You're going to go, this America can afford to make these blunders with Iraq. Now, again, that was a closed society going in saying, yeah, look, we want democracy. Didn't work. But America can make those blunders because it's rich. Russia ain't rich. Russia is poor. Guy is an idiot. And so now, and again, it's like, really? You want to take on Ukraine? I tell you what, and they're beginning to take my advice. First of all your sleazy billionaire mates, we're going to find their houses in London. We're going to confiscate them. We're going to take you off Swift. You don't exist. Go and live with the Mujahideen. You are an idiot. And what is he now doing? He's saying, oh, you've misunderstood me and all your bellicose language. You're pretending that it was my idea. Vlad, we didn't put 100,000 troops on the border of Ukraine. You did, you idiot. Now get them back or you're finished. You're an idiot. And again, bluster. This is a great one. So, I love this one. So, the Russian ruble is fully backed by by gold. And that's kind of supposedly a big deal. I can just Vlad's like, I love it, right? The ruble, they're never going to short sell the ruble because it's backed by gold. Who cares? You've not been keeping up. We changed economics 100 years ago, you idiot, right? We will short the ruble till it goes to zero. We don't care about your gold. It's an old relic. It's an idiot. Anyway, forgive me, Vlad, if you're listening.
Let's Hugh talk to himself out of any trips to Russia or China in the next 40 years. So, but there's other places you can go, so you don't have to worry about it.
I have created my libertarian utopia. My open society is here with this beautiful aura of vegetation and beaches and rosy and tequila.
One of Vladimir Putin's best mates does live next door to you, which is slightly ironic, or has the house next door, shall we say? He's not always there.
Sure, he's a robber. He's a thief. He's a moocher.
I'm not defending him. I'm not defending him. I'm just stating a fact. I'm just saying he just is there. I'm not saying that Roman Abramovich is a good guy or a bad guy. I'm just saying he's there. You know?
Yeah, but no kudos to the guy. Okay, again, how you deal with blundering idiot Vlad? You say to people like Abramovich, stay in Russia. You're not welcome in St. Bart's. You're not welcome in London. I mean, London's already pulled his passport, so now he's in Israel. Right.
Yeah, he's Israeli. He's got an Israeli passport. Yeah. London don't let him go there. Anyway, it's been a special. I mean, the king has spoken. The king has spoken, and our king has spoken. It's been epic. But before you go, the acid capitalist, Wheel of Fortune, my friend, your favorite time of the week. You have to pick a number between 1 and 59. That relates to a random term, which I've got written down on this on our sheet, and Hugh then tells us a hedge fund story related to that. So Hugh, a number between 1 and 59, please.
I think I speak on behalf of the audience when we were all thinking, Chris has forgot about the
no. The Wheel of Fortune. Okay. Go for it.
So George Soros began his illustrious hedge fund career in the year 1969. 69, s'il vous plaît.
No, it's between 1 and 59. You can't go as high as 69. But you could go. So I'm sorry about that. You could go 6 or 9. You could do 6 or 9 if you want.
I was never good with numbers. Let's do 6.
Okay, number 6. Do you have a hedge fund story involving Elton John?
Let's do 9.
Okay, number 9 is, do you have a hedge fund story involving a factory?
Yeah, I've visited lots of factories. I don't really have very amusing stories. I visited WD-40. I was the biggest shareholder in WD-40 on behalf of clients when I worked in Edinburgh. WD is water displacement test number 40, part of the NASA space program. Kind of anti-rust, and on the 40th attempt to create this solution, it succeeded, and the name succeeded. And it was back in the bad day, just before I was about to commit suicide with Reader's Digest, and I was buying these ubiquitous products. Anyway, I went to visit WD-40, and the global headquarters was like just this small warehouse, the most unappealing, most unassuming warehouse on the edge of, I think, maybe San Diego. And he opened a cupboard, and there was the WD-40. It was just the most, like WD-40 means something to everyone, is kind of baked into your life. There's always a can of WD-40 in your childhood memory with your father or whatever. And you go right to the center of the universe, and he opens a cupboard that there's like 100 cans of WD-40.
Superb. Oh, I love that. See, the Wheel of Fortune, it never fails to deliver. What a feature. Anyway, people, thank you for flying with the Hedge Fund podcast. We hope you have enjoyed your journey. We wish you a safe onward journey, and we hope you will travel with us again soon.